morning from the For the CME. This is Chris Robinson, Top Thread Ag Marketing, with two trades I'm looking at here today. First, going to start with the grains, and then we'll move into the S&P. The big thing is it's Thursday before the holiday weekend. We've had light volume, continued to probably see that the rest of the day. Light volume equals choppy trade. You may want to hold off on doing anything large scale until Monday when everybody's back from vacation. Overnight, we had a new high in old crop beans. However, we've had some profit taking here. Not surprising. You get a new high overnight going into the weekend. We'll have to see where we settle at the end of the day. But that's been the story. We've seen old crop beans pulling up new crop beans. That spread, the July Nove spread, 4 days ago was at 231. It traded out to 277 last night. It's come back a little bit here so far today. So that's been a pretty dicey trade. July Nove on the last USDA traded out to about 255, came back hard, rallied out, and now we've again come back to around the 277 level. A lot of people are looking towards the future, the magical $3 number or possibly higher. We still have a problem with old crop beans. Now, we're seeing beans come up from South America. They're coming up through the Gulf. Hopefully, if you're an end user and you're looking for beans, that should ease the situation as time goes on. However, every time this market's gotten a bearish, what you would think would be bearish news, it's continued to turn around and rally. So that's going to continue to be a spread you're going to watch here. As May goes off and we switch to July, you're really going to have to watch the July Nove spread, old crop, new crop spread. The wheat, of course, is just pretty much trading off of, we had a little bit of concern about winter kill here earlier in the week. And then the other thing, of course, is continued stuff going on in the Ukraine. The market wants to, support wheat here based on that. If that ever gets cleaned up, or if we start getting better crop conditions, you could see a little bit of a pullback here. But if you look at what we did, a nice $2 rally, a good correction, we rallied back. Look at 725 July wheat. That's a big number. That's a 10-month high. A lot of traders are focusing on that as a next upside target. And then finally with the corn, watch new crop D's corn trading around that $5 level. If that does not maintain, you could see some backfilling there. The high of the day of the report was 517. That may be the seasonal high. Some people are trying to call that a seasonal high. Again, it all depends on the weather. The 6 to 10 day looks pretty good. 80 degrees in Iowa this weekend, and then all next week in the 70s. That means the planters are going to be rolling. So the people that were looking for planting delays as a reason to get long new crop corn, they may have to start looking around for something else to feed the bull. So that's really about it. We're heading into a holiday weekend. Look for thin volume, choppy trades, but watch those spreads I was talking about. And then finally, I was looking at the June S&P. There's some interesting numbers. I'm going to look down here so I don't misquote. The low on February, when we had our first little sell-off there in February, that was 1726. Then we turned around and in fits and starts rallied up 166 handles to the contract high, which was 2 weeks ago on the 4th on the unemployment number. We had a bit of a pullback on Monday. Everybody was talking about Monday. Monday was important because 1809 was the halfway point of that 166 handle move. 1809 was halfway back. Monday, we traded down to 1803. A lot of people were trying to jump on that and look, okay, catch the next wave down. Obviously, there was no follow through. We spun around here. As I walked over here this morning, we were trading 1857 was yesterday's high. 1857 might be the 1860 level, maybe the high here for the day. However, there's an old adage, never sell a quiet market. The only people that are really trading today are people that quite honestly have to. Typically that's professional traders. Professional traders like to sell it. So you may see a situation where the pros sell it, there's no follow through, then they chase it back. In my career, I've had some of my worst performances on the days before a holiday because there's not a lot of people standing around, and There's not a lot of market players in the market. And if you start to try and trade ranges, you can get spooked out because it gets very thin if you need to get out of a loser. So I'd watch that, but that was pretty key. That 1809 level and the June S&P, I can't talk about that enough. That's halfway back. We may revisit that. For the time being, though, you've got to look at that contract high at 1892. A lot of people want to get that 1900 even print. So we'll see a battle between the Bears and the Bulls, especially next week when people get back in the saddle and start trading more. So that's about it. From the For the CME, this is Chris Robinson. Have a good day.